Welcome back to the Digital Asset Report. Gold and silver are the headline story this week. Gold briefly topped $4,000 per ounce for the first time ever before pulling back to around $39.90. Silver, in the meantime, passed $50 for the first time in history. Gold has now risen roughly 52% this year, outperforming Bitcoin's year-to-date gains and confirming the debasement trade narrative as investors hedge against monetary expansion and global uncertainty. Bitcoin is holding steady near 121,000 following the release of Federal Reserve minutes signaling more rate cuts before year's end. Bitcoin did briefly pull back to 119 Thursday morning before recovering. Traders are pricing in a 25% basis point cut in October and another in December with 95% and 80% probabilities respectively. Meanwhile, US spot Bitcoin ETFs remain a powerful tailwind. This week alone, funds saw over $1.9 billion in new inflows, keeping the 121 to 126 range intact with 130,000 in view. BlackRock's IBIT ETF continues to dominate, crossing 800,000 BTC in assets under management after a $4 billion inflow streak. That's roughly 3.8% of Bitcoin's total supply and solidifies BlackRock as the largest single holder of Bitcoin through a financial product. The fund's total assets are now approaching $100 billion, making IBIT the fastest growing ETF in history. Institutional adoption is accelerating beyond Bitcoin too. State Street's latest research finds that institutions plan to more than double their crypto exposure from 7% today to 16% by 2028. Nearly 60% of respondents expect to increase allocations within the next year, citing tokenization and blockchain infrastructure as key drivers. Private equity and fixed income are expected to be the first areas to see major tokenization gains, offering faster settlement, lower costs, and greater transparency. In global policy, Luxembourg has become one of the first European nations to allocate part of its sovereign wealth fund to Bitcoin ETFs. The $900 million fund placed 1% of its portfolio, around $9 million, into Bitcoin products, citing growing maturity in digital finance. Officials say the move aligns with a new investment framework allowing up to 15% of assets in alternative investments, including crypto. Across the Atlantic, the UK has lifted its 4-year ban on crypto exchange-traded notes, signaling that regulators believe the market has matured. The Financial Conduct Authority now allows retail investors to access crypto ETNs through approved exchanges, and new policy changes will even permit those products in pension and saving accounts starting in 2026. Analysts project this could expand the UK crypto market by up to 20%. And Washington, D.C. remains paralyzed as the federal government shutdown enters its second week. But sources tell Blockworks the Senate Banking Committee plans to continue working on crypto market structure legislation even through the shutdown. The Responsible Financial Innovation Act is expected to move forward with a markup hearing before the end of the month, keeping crypto regulation in play despite limited agency operations. Congress is still aiming to pass the Clarity Act by the end of this year, despite the government shutdown.
I think we still have an opportunity to get clarity across the line by the end of the year, although the focus and attention is making sure that we get the government back open. There's a lot of ongoing conversations as well about clarity and market structure on the Senate side. I'm actually continuing in conversations with some of my Senate colleagues on that topic throughout the week this week. And so I'm hopeful that as we come on the other side of the shutdown, that we have an opportunity to hit the ground running and have the Senate move forward quickly. And I think the opportunity there is to build on the success that we had in the House legislation. And if the Senate chooses to use the House text as their base text, I think what we have is an opportunity to get this bill still done, signed into law by the end of the year.
And in the broader market, crypto investment products are smashing records. CoinShares reports $4.87 billion in inflows so far this year, already surpassing all of 2024. Bitcoin still leads with $30 billion, but Ethereum funds have risen to $14 billion, tripling last year's total and driving Ether's share of the market from 11% to nearly 30%. Solana and XRP are also major contributors with inflows of $2.7 billion and $1.9 billion respectively. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.